So let's actually go ahead and basically learn how to frame a swing failure pattern, and also just what is a swing failure pattern in general, right? It's under sort of different names. Some people call it failure swing, some people call it SPF. Basically, the idea is that price is moving in one sort of direction. So in this case, right, this is a case study on gold that I did call prior, and I'm going to go ahead and show you exactly sort of what my thought process was and what I was looking at. But basically, right, gold was bullish, right? If we go on monthly, weekly, all of those different time frames, we can clearly see that we're in a bullish trend. Okay. Now, a failure swing is when price should, quote unquote, continue to the upside, right? But it decides to break down, failing to create another higher high. So, for example, right, let's just say we look at the extended trend here. So let's say we made a higher high here, we made a lower low, a higher low. From this level, we should then go and see a new high be created here. Okay. What we actually have seen here is price has failed, right? Hence the name failure swing, to go ahead and pretty much go higher, right? Above, when we are bullish, we should see strong closures above swing highs. We want to see bullish arrays being respected in the form of order blocks, FEG, mitigation blocks, breaker blocks, etc., etc. When we don't get that, that is pretty much when a swing failure pattern becomes apparent. Okay, so just to sort of explain some of these annotations here, right? When we were going higher, and I've talked about this in plenty of different videos, when we are bullish, right, any move beneath a swing low should be treated as a turtle soup to go higher, right? Pretty much a liquidity grab. So when price went beneath this low here, swept it out and basically went higher, we would have assumed that price was still bullish at this point. Okay, so even though we have what some people would view as sort of a breaking structure here, we don't ever want to call tops in bear markets, right? But what you can do is you can basically wait for that failure swing and then trade off of that. So like I said, at this point, total soup, price should have continued to the upside, basically going ahead and reaching for this high. Now, what do we get? Price fails, okay, to close above this major swing high. Price goes ahead and fills this SIBI and rejects away. So it's showing us a willingness to respect bearish arrays and basically act within sort of the bearish nature and bearish rules that we follow. So like I said, when we have old highs and we are bullish, we want to see closures above those. But in the reverse, if we are bearish, we want to see old highs being wicked out and price trading lower. So here, right, where in my opinion it would have been more or less unprobable or sort of unfavorable to short, once we get this failure swing, i.e. this failure to create a higher high here, and then we get this breakdown. So through this, we can clearly see, if I move myself, we can clearly see how, like I said, swept liquidity, bearish arrays are now being respected in the form of what? We have this would have been an order block to act as a rejection block. A breaker block. We've had old lows being closed through. We've had FVGs basically being broken through and acting as resistance. Okay, I just grab this rectangle here. There we go. So let me just basically show you exactly how I framed this trade, sort of based on the intraday stuff that we had. So if I go on the weekly, right, which potentially may appear a bit more clear. So at this point in time, I'm unsure, right, whether this is a breaking structure or liquidity grab. I'm assuming it's a liquidity grab until proven otherwise. So once we saw this very strong bullish candle away, I was looking for this high. Okay. Then we played around, price didn't really go anywhere. Now this weekly candle where we went ahead, filled in this weekly SIBI and rejected away, this is starting to show us the potential formation of a failure swing. Okay, once we then got this break, this closure beneath this low, that's when I went ahead and was confident in this bias actually being bearish, right? So in terms of the weekly candle, we had, what was this, Thursday, Friday. So we had the weekly candle close here. Now before this week started, I wouldn't have been trying to short here because we could have literally just kept on longing from this order block. Right? There's literally no reason to sort of doubt that bullish bias, right? We could have seen this as market maker buy model, original consolidation, areas of redistribution, prices going higher, respecting bullish arrays, and it's perfectly fine. Now, once we got that closure, which was on Wednesday, like I said, that really puts in this failure swing, and that's when our draw started to favor this low down here. And if we actually go on the monthly, and let me just turn off some of the stuff, you can start to see how in terms of previous month's high and previous month's low, I started to favor the low. Okay, now I have replayed this a couple days, so this isn't sort of the exact data we're looking at right now. And hold on, let me just move myself here and get the pen. So based on sort of now the weekly cycle, okay, we can see how Monday created the high, Tuesday created another candle, a little bit more indecisive, and then Wednesday went ahead and showed the expansion lower. Now in a classic sell week profile where Monday/Tuesday creates high of the week and a price expands lower, we want to see Thursday or Friday go ahead and ideally create low of week. Now if I played this along, it doesn't actually get to this low, but that's completely fine. When we're looking at a draw, we're looking at price to act as a magnet, right? We want to see price gravitate towards that. So as long as price has moved towards the area in which I'm looking to target in that specific session, that's what I regard as a successful session or a successful bias, if that makes sense. So after we'd printed Wednesday, I wanted to see Thursday go ahead and create low of week, right? So I wanted to see this candle here, the one I've got the arrow on, go ahead, tap into some sort of bearish array, and then navigate its way down to this low. So if I actually go ahead and replay this, let's actually have a look what happened here. So there we go. So on the 4 hour, you can see how we form this 4 hour FEG. So for you guys who like to look at sort of internal range, external range, this is simply internal range to external range, yes, but also you don't want to neglect every other factor that I've mentioned, okay? So you actually want to factor in all these other points, all of these weekly profiles, failure swings, breaker blocks, all this stuff is really important. You can't just sort of look at the market plainly from an internal range to external range perspective. So yeah, let's keep going. So we have the 4 hour FEG, that was our POI. And well, you know what, we'll go on the hourly and let's play this along. So you can see Asia started off, right? So the daily open is here. Let's just mark it there. So we know that anything above that, we're going to look to short from. Okay, let's go on the hourly. There we go. Okay, so we tap into the 4 hour FEG, very nice. Right, key thing here, we go ahead and we create a swing point. So a swing point is basically when you have a candle to the left and the right of a sort of middle candle here that has a wick on the left that is lower than the middle candle, right? So sorry, I probably didn't explain that very well. So basically we have a candle in the middle, that's candles to the left and the right have a wick lower. Okay, pretty much. When you get the closure beneath the low of the candle, that basically is a stronger swing point in a way. It just provides more confidence. So we produced this swing, right, this swing point. Realistically, we shouldn't really go ahead and break that level now. Okay, that should be set in at the high, right? Then you guys know I'm going to go ahead and use a daily cycle. Now, I haven't touched on this daily cycle. I've mentioned it very loosely in other videos. I'm not going to break it down crazy, but basically the characteristic of it is, or a variation of it is, basically creating a high in between sessions. So we create the swing point, we're literally taking out equal highs here, and then on the 15-minute we've shown a willingness, right, to go ahead and see price break lower, okay, via this displacement, okay, beneath this swing low. And technically speaking, this is a propulsion block style entry as well, okay, which I've mentioned before in previous videos, right? Why is it propulsion block? This is the order block that changes state delivery, and then this is the propulsion block, right? So we get the closure beneath, and pretty much like you could have just went ahead and executed like that, right? Stop at the high for a more conservative one. If you wanted a bit more of a risk type play, you could have had it at the liquidity. This is where the trap traders are, and we shouldn't really go back and reach this level. Then what I do is I TP based on time. Okay, so yes, this is the ideal target. Let's just say we do have a higher SL here. That yes, ideally we'd run it all the way down to Wednesday's low, right? Like I said, I don't really want to see the low on Wednesday forming the low of the week, because typically Thursday and Friday are the days that are going to form that. So I'm using that in confluence with just every other point here, I guess, right? Previous week, month's low, and all that good stuff. So let's actually have a look what plays out here. So just to notice, right, this is the start of AM session, New York session. So this is Asia, this is London, this is New York. So price runs very, very, very aggressively to the downside. And let me just get to the end of London close. Right, so during this period of sort of just London close being, I'm going to give it to you in New York, in London time, which is 3 o'clock to 5 o'clock, okay, PM. Pretty much for this specific cycle, this is where I'd want the low of that cycle to be formed. So I'm looking for anything on the left to basically give me an indication that we should take profit here, right? And typically what you'll notice is if you look for, let's say you view this FEG as a roadblock in price that it may struggle to get past. If you go ahead and look for these levels, right, to get tagged at key time of day, you will notice a lot of the time that they line up with sort of, let's say, London close or the expansion of a session. So I won't, like, for example, let's say all the way on the way down, right, you might have said, oh, well, why did you not pick this FEG? What about this FEG? What about this FEG? The point why this FEG becomes relevant is because of the time that price goes ahead and reaches into it. Okay, let's just see if there's any other areas that I think are noteworthy. Okay, not really. Normally I'd pick an hourly or a 4-hour level to sort of take profit on, but in this case this was the only one. So majority of the position taken out around this level, again 2.5R / 4R, depending on how you want to go ahead and play this out. So yeah, hopefully you guys enjoyed that. Hopefully you understood sort of that whole idea of a swing failure. Even in this, right, price making higher highs and higher lows, it's not as apparent on this, but on the 5-minute probably shows here, this would be that turning point where price should have went ahead, continued higher, but in fact we get a swing failure. That swing failure makes a new low, and then price retraces, and this is typically your best entry, which is pretty much exactly where we looked to engage on this hypothetical situation. So you can even use it from a entry standpoint as well as a higher time frame. You probably use it on a lower time frame already and you just don't even realize. So this isn't me like rebranding something or putting like a special name on it. A lot of the sort of larger institutional guys use this idea, like the very, very, very successful ones. So this is definitely something that you can consider. and it basically stops you from getting caught out on these reversals, right, of price continuously making higher highs and you trying to short this. It actually allows for some switch over and order flow, and for price to really sort of show you that we're going to turn around. Okay, so hopefully you guys enjoyed that, found that insightful, and I'll see you in the next video.